Starting our final show for this week only. It's our weekly wrap-up. So, ladies and gentlemen, today we have a special day. We have the US NFPs coming out. So, hey, stick around. Hopefully, you will enjoy the session. We're going to talk about all this. We're going to talk about the yesterday's ECB rate decision. So, hey, hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay, ladies and gentlemen, hello, and good morning. Well, good morning for me, and good day, good afternoon, wherever you are, ladies and gentlemen. So welcome everybody. My name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. So let's do this weekly wrap up, the usual what we do here. And yeah, look. Today is what day is it today? Today is the 7th of March, 2025. Yep, and look, it's one day before a big celebration, Women's Day. So I hope all gentlemen there are going to be congratulating their ladies, tomorrow. So don't forget to do that, and have a beautiful day, everybody. Look. Let's jump into the charts, but before we even do that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to finish off a few things here and there. So yes, right. Look, also, just to quickly mention our main webpage, the Markets.com webpage, which you can always check out for more information about us. If you have any questions, reach out to us. Yep, we'll be more than happy to assist. I believe you can find some useful information on our website. So, ladies and gentlemen, let's see what's happening right now with the stock market. So, Nikkei 225. So we broke below the lower side of that range, which I talked about. This is the weekly chart, and we stayed below it. Okay, look, this is still the cash index. I mean, a lot of things can change. So maybe, the cash could reverse back up again, and, we could see a push back up. So that's why I'm just being a little bit on the careful side for now. And yep, I'm just, I'm still leaning towards the downside as long as we stay below this 37,200 and kind of in the 69.70 zone-ish. And if we do that, then yes, great, further declines are possible, and this scenario is working out nicely. Then we could target maybe that 35,111 zone, which is marked by the lowest point of September of 2024, and then maybe even below that, the 35,000 mark. But again, look, for now, let's keep it short and simple. For now, let's just target the downside as long as we stay below this hurdle, below this area right there. It's not specific. It's not a specific level. It's more of an area. And if we do somehow pop back above it, then hey, maybe the downside scenario is kind of off the table. So we'll keep a close eye on that one. In terms of economic data, ladies and gentlemen, so we didn't really get much from Japan today. I mean, but the main focus today, of course, will be on the NFP readings. But okay, that's something that I'm going to pick up when I'm going to pick up on these US indices. But for now, if those are going to slide, I mean, it's probably going to drag. It's probably going to drag Japan and Australian indices after them. So speaking of Australian indices, index specifically, ASX 200. Now, what's happening here? I talked about this before, and I said to you, look, I mean, we have ourselves here a situation where we're getting a little hold up near the 200-day EMA. And I said to you that I need to see a clearance of the zone in order to go lower. If we can get that, amazing, I'll go further south. But at this point, I'm taking a pause. I'm not really getting very comfortable with the upside because, again, we need to see like a stronger reversal from here. But we're not getting that. There is still a good chance for this one to drift lower, but we just need that clearance. China 50, let's have a look at this one. And yep, we are climbing back up. Look, China 50 is looking quite good actually. But let me just quickly have a look at the data that came out this morning. The trade balance, the Chinese mainland China trade balance. So the exports dropped but the imports dropped as well significantly. So I think that this is kind of something of a retaliation towards, towards tariffs and what's happening right now on the geopolitical platform. For now it's unfortunately it is the war, the trade war, as they call it, but eventually everybody will realize that nobody's a winner in there. Only we, the people, start losing out. The winners are always, we know who the winners are, but we, the people, are the main losers in all this. So unfortunately, that's how the world operates and how politics work, and it's never about the people, it's always about profits. So basically we can see that the trade balance improved, the Chinese trade balance improved, but mainly not because of the, let's say, higher exports. No, on the contrary, exports dropped, but because imports dropped more, more significantly, then that kind of brought the trade balance higher, which of course, okay, resulting in something positive here. Initially it was something positive, but let's not if we look at it from the more deeper perspective, then you have a slump of exports. Let's have a look here. We have a decline in exports, and also imports dropping heavily in negative territory. That's not good. And the fact that imports have dropped significantly, that's showing that China is also trying to fight the U.S. economy, the U.S. administration, we know that China is a big buyer of agricultural goods from the U.S., especially soybeans, for example, which is used for cattle, and other spheres and other sectors. But like I said, this one has dropped significantly, so we'll see how the stock market reacts today when the U.S. stock market opens up. So jumping into the U.S. very quickly. Wait, from the technical perspective right now here, China 50, what I'm looking at here is still the same game plan. Look, we had a drop below this, and you know what? I really want to go remove this, and I want to bring the colors back here, the ones that I was talking about. So I think that would be quite useful here. And let me just bring this right there like this. And look, I mean, what I'm trying to achieve here, basically, I'm looking at this from the perspective of like little ranges, because again, that seems to be like working out nicely. Okay, let me just put a highlight the areas what I'm talking about, to show what I'm talking about here. So yeah, something like this here, and something like this here. Let me just, there we go, that's what I'm talking about. So these are the little boxes that I'm currently examining, and at the moment I need to see a clearance through the upper side of this box, and with one which is more into the right. Basically a push above the 13,500 zone would be ideal, would be nice. And if we can get that move, amazing. More buyers here could join in, so we could start shifting our attention maybe towards the highest point, the high of the 30th of December, near the 13,716-ish zone. But then, yes, I mean, the main target would be the highest point of December in general, near the 14,192. So that's something that I'm looking at. The fact that we've pushed back above all my EMAs on the daily chart, that's also great. And this is, like I said, this is something that like I'm keeping an eye on. For now, look at the downside scenario. Yes, if it starts falling back again below the 100-day EMA, hey, great. I'll consider some lower levels. Let's jump into the US. And again, I'm going to bring back the three US indices, three top US indices back here to the table. I think it will be easier to analyze this way, because yesterday we saw major declines. Nasdaq was the biggest loser. Tech was the problem, and Tech was like under pressure. And let me just Yeah, I think that there was pressure on from the Chinese side because again, additionally, Alibaba unveiled a new generative AI model that it claims outperforms DeepSeek, further fueling concerns about China's advance in the North. Ah, okay. So right, okay. So basically, the China was the again, like this is what probably the new administration would like to hear, that it's China's problem again. So it's because of China we're not performing very well. But anyway, let's see what's gonna happen here again. For now, look, I talked about this idea of testing the 200-day EMA here, shown as the white line. Yeah, I mean, these fellas here, the S&P 500 and Nasdaq. Well, Nasdaq dropped below the 200-day EMA. My question is this going to stay below it? If it's going to stay below it, well, I mean, this is not good. This is not good. But let's say if it stays below this 200-day EMA today, at the end of the day, trading session today. But if it stays, then yes, of course, this is, like I said, this is becoming very worrying. My only problem is that these two, okay, S&P reached the 200-day EMA, but still above it. Dow Jones Industrial Average still has not reached the 200-day EMA. So maybe this moment here on the Nasdaq 100, maybe we're just gonna get that as the usual what we got here back in August of 2024. We also broke below the 200-day EMA, kind of it spooked the market, but then everybody started jumping into it again. So basically, this would allow this little short trading moment below the 200-day EMA could allow could give some time for the Dow to test the 200-day EMA and then rebound. Everybody can rebound back up and push higher. Again, theory. I'm not saying that this is for sure, but this is a little bit of theory right there. NVIDIA. Let me just double check what's happening with NVIDIA. Yes, I mean this one is not feeling the love. And we're seeing, let's see what Broadcom is coming out with. Yep, Broadcom showed good results in general because they came out with earnings. When was it? Yesterday. Yesterday they came out with earnings, good results in general. But yep, it didn't really like the world didn't really like the fact that anything US AI related because. Again, Alibaba seems to be taking the crown right now, and forcing NVIDIA and Broadcom to drift lower. Also, these tariff wars, yeah, that's something that the market doesn't really like. But let me just double check the situation here. Yes, AMD as well. Yeah, that's another one. Chip maker. There we go. AMD falling below $100 mark. Right. Okay. This isn't quite interesting. I think this AMD could be shifting towards this little area, the 93.12 zone, somewhere there, and then maybe we'll take a pause here. But hey, could be an interesting stock later on. I think that yes, a lot of those could be interesting, but hey, let's not rush into things yet. Okay, we're not really, I think, done with the downside or this weakening. But another thing for the Dow here, look, I mean, I'm looking at this range overall because I think that let me just put a weekly chart here. I'm looking at this range, and I think that this is where it could be quite interesting as well, because this is, it seems like it wants to travel towards the lower side of this range. Again, am I saying that this is going to be happening for sure? No, because again, I don't have a crystal ball. However, we are applying in technical analysis. And another thing is what I'm watching here is that if that upside line, if you can see that on here on the chart, if we stay on the weekly chart, if we stay below that upside line, again, that's kind of opening the door towards that lower side of the range. And by the way, look at this on my weekly chart here. The 50-day EMA is approaching this area. Hey, why not to reach that one? I mean, this looks quite good. So let's see if we can stay below that. So, ladies and gentlemen, now, so yeah, like I said, yesterday we saw this sell-off, and something tells me that maybe we're not done with that yet. So again, let's see how today's day is gonna play out, but certainly it doesn't, sparkle positivity. Let's jump back into one chart only, and let's jump into the dollar index first. Yes. Dollar index. Let me just put some US data on the table. And let's go through the beginning. So Monday we had the ISM manufacturing PMI number, which did not very sparkle with the bulls, and it came closer to the 50 zone, and yeah, that's not really something that the bulls wanted to see. The bears took the lead. Wednesday we got the ISM services PMI, which okay, gave a little bit of an improvement, but then everything, I think before that everything got destroyed with the ADP employment change number, which came out like, whoa, very low, almost double the forecast, the initial double to the downside of the initial forecast. Then ISM services PMI managed to stabilize a little bit the market. That's fine. Then Thursday we hit the initial and continuous jobless claims, trade balance, U.S. trade balance. Of course, it decreases. Exports, yes. Import, okay. Initial claims, okay. Initial claims came out a little bit on the lower side. Continuous, do we have continuing jobless claims? There we go. An increase, right? So there were more people who were continuing to claim benefits, right? Not good. Now today we have this. We have the long-awaited ADP. Oh, sorry, NFP. And that one, non-farm payrolls, there we go. That one is currently expected to come out at 160K against the previous 143K. As I already did a few pieces here, a few analysis, you can check it out on our YouTube channel. Let me just show you what I'm talking about. Where's that channel? Where's that channel? There we go. So this is what I'm talking about. So basically you can check it out. It's currently me learning this one live. And you can check out the video that I did here, the separate video on NFP. You can check the idea. You can also check my, well, okay, maybe it's already after the fact, the ECB idea as well. So yeah, it was kind of an interesting one here as well. Yeah, look, I mean, dollar didn't feel the love. Look at this sell-off. Look at this major sell-off. I mean, weekly candle. I mean, look at this. Dropping in a week so far. Dropping in a week around 3%. Well, I mean, that's a lot. I think that's a lot. And we have seen this happening last time somewhere around here. Actually, that's when we last time dropped around 3% as well. What was it? That was 4. Okay, that was 4. Ah, wait, okay, maybe it's, yeah, the measuring. Okay, so what about this part here? Less than that. But yeah, I mean, look, I mean, okay, 4% last time. That's the biggest gain, or the biggest loss since November, the beginning of November of 2022. Wow, I mean, okay, I mean, that is just, I want to say spectacular, but again, depends on which side you are, so, but at the moment, yeah, it's not really, feeling the love. Look, eventually it will rebound, but maybe not now. This is the main driving force right now for all the EURUSDs and GBPUSDs and AUDUSDs and NZDUSDs to go higher. But not that they're stronger. Look, I'll get to this Forex world in a bit, but not that they're stronger. It's mainly because of this. Look at this. I mean, DXY falling. This is a weekly chart. I mean, this is, wow. On the weekly, we pierced through the 50, the 100. Question, can we stay here? I mean, I don't know. I mean, let's, for now, look, I mean, I'm still pointing towards the downside, and my next target is the 103.26 zone. On Wednesday in the morning, I said to you, guys, my target is, if we do fall below this, my target is the 104.40. Mission accomplished. Fantastic. Oh, Jin Dao, hi, good morning. TGIF, dude. Please excuse my, please excuse my, my low level of education. What is the TGIF, please, Jindal? Yeah, and thank you. All the best for the NFP today. Thank you. For you, the same. So yeah, I'm waiting until you're going to answer to that question, Jin. And then yeah, we'll go to another question, which I'm going to answer. I'm going to ask you as well. But TGIF, what is that? I mean, maybe I'm not literate in this, in these, in these shortenings and stuff like that. But anyway, thanks God it's Friday. Okay. Yes, got it. Look, lower or higher, Jindao, lower or higher, NFP, your call. I'm just gonna bring it back into the chart here on the screen. So 160. I'm going for something around the same, but I'm looking at yeah. So yeah, Jindao, like, let me know what your thoughts. I'm kind of going for around the same, something close to 160, something like 143. That's what I'm kind of going for. I don't know. We'll see. But my main thing, my main focus is to see what's going to happen with the previous number. That's where the interesting part could come in. $1 million question. Well, you know, as the new U.S. administration likes to say that millions and billions and trillions, you know, like in thousands of millions and stuff like that. Yes. ADB wasn't great, but it's not exactly. I totally agree. I keep on saying this as well to people. Like, I mean, Jindao confirms. Yes, he's also. By the way, ladies and gentlemen, Jindao is also a fantastic analyst. So you can check him out. Like, honestly, and you know, 120. Yeah. I mean, look, I think that could be quite an interesting one. Okay. Look, so coming back to the US dollar index here, look, I'm still aiming for the downside on this one. My next target is somewhere around here, marked near the low of near the lowest point of November of 2024. Now, let's jump into the fun stuff. A new all-time high for the DAX. Amazing. I mean, look at this spectacular move. I mean, I don't know. It seems like it cannot stop. But it has to stop at some point. 23,407 almost reached the 23.5 zone, and that's on the cash index, by the way. On the futures, we did reach that. So we did reach that. We were just hit that, and then we slid back down. So what's interesting here is that, look, again, I keep on saying that purely from the technical perspective. Whenever we clear an all-time high and we create a new all-time high, and then at the end of the day, we fail to stay above the previous all-time high, now that's where the issue arises as well. I mean, it doesn't happen all the time, but hey, certainly this kind of can cause this shooting star moment. This is where just a second, because I'm trying to double check myself very quickly. Yeah, the shooting star, because I kind of had just doubted myself for a little bit at this moment about the the naming of this. But anyway, yes. So this could be classed as a shooting star, so potential reversal signal. According to all the TA rules. Now what we're seeing here is a push lower. Now that's why I'm not removing this little hurdle here, this 23,067 zone. I like it. Yesterday we had a good hold up there, and now let's see if we can clear that. If we can clear that, and if we do, then I'm opening, this could be opening the door to some lower levels. And yep. That's what I'm going to do for now. That's what I'm going to aim for, and I'm going to aim for this upside line. But again, at the same time, this upside line is very tentative, because what about, let's say, drawing from here? That's like still okay, right? I mean, that's not an issue. Let me just put this like this. So, I mean, this could be a good sign. This could be a good line to watch. Maybe there's another one that we can watch. Maybe it's this one. What I'm trying to say here is that it's all subjective. It's not really objective. So what you can do is, for now, just aim for these two, steeper upside lines and kind of go from there. And then, we'll see what happens. But for now, yes, 23,067 is something that I'm watching here on the cash index. If we can clear that, and as we speak right now, it seems like it wants to go lower. Let's see. I'm not rushing into things. If by any chance we start popping back above the 23,311, then yes, great, more more buyers here could join in. Yesterday, as you know, we had the ECB. And now let me just bring up some stuff here. So again, yesterday, as we already knew, the rate decision happened. I mean, we knew what's going to happen. Where's that Eurozone? Let me just stick it in there. We knew what's going to happen. We knew that we were going to get that 25 basis point cut. Fair enough. Everything's in line. No surprises there. What we were looking at, what's gonna be further, what's gonna happen further, and how they're gonna be approaching further. Are they gonna be cutting rates or not? But and looking at some material here, so it's going to be very difficult for them actually to justify the cuts, because again, they think that the inflation is projected to average around 2.3% in 2025, 1.9% in 2026, and 2% in 2027. So, like, why the hell you need to continue cutting rates unless you want to bring inflation up later on at some point, because you want to make lending cheaper, and this way, later on you want to bring the inflation. You want to bring inflation back up, right? Look, what can I say? What else did they say? The economic growth forecasts were revised downward, okay, reflecting weak exports and investment. The ECB remains data dependent and will adjust the same story. It will remain data dependent, will adjust its policy as needed to ensure inflation stabilizes around its 2% medium term target, without committing to a specific rate path. So basically that kind of helped the stock market to fly. We saw the German index here pushing nicely to the upside. It's kind of, there is still this positivity, but I think that right now the real world environment is kicking in, and people are worried about what's going to happen next. Are we going to see, will the further possible rate cuts, could they actually keep the stock market here running higher? In a way, at some point, yes, but I think that the way it could shift, the way the tides could shift later on, is that those lower, those talks about lower interest rates could help the stock market not to fall too much. So we're now probably going to go for a bit of correction or something like that, especially if we clear this little territory, which I talked about, and we drop below yesterday's low, then yes, I'm leaning a little bit more towards the downside. And if we can get that move, amazing, wonderful. I think that yes, more sellers here could join in. We could see a nice shift here. Let's see what's happening on the weekly candle here. Okay, look, good movement there. At the moment, yes, it seems like we are trying to approach this from the lower side, so it seems like it wants to go to the downside. Just checking another source here. Yes, I mean, it seems like it does want to go lower. Look, will we get that move? I would say it depends. It really depends if we clear this little territory. So keep your eyes on it. And if you are trading DAX, of course, I understand some of you are probably wishing to go for a bit of a short here, but again, it's still a little bit on the tricky side. Look, what can I say? Now jumping into UK. UK is at an interesting spot here as well. Now this one is actually forming something of a range here. Let me just point this one out. So basically, this is what I'm talking about. This is that little range. Let me just bring it like this back here. So this is what I'm talking about. This is where it's going to become very interesting. And if we can clear this lower side of the range. By the way, I talked about this on Wednesday, and I said to you, if this is going to get cleared, if this 8,743 territory gets cleared, I'm aiming for this 8,600 kind of 10 zone-ish. But look, I think mission is accomplished. I think this is a good result. Now I'm just going to stick to this. If that gets cleared, yes, more lower levels could be met. That's how I'm going to say it. Let's jump into the Forex world very quickly, and this one is a blast. This one is very, very interesting right now. I think that yes, the weaker dollar is helping a lot. this pair and other similar pairs. But the fact that there's still like a bit of weakness in, in the Australian dollar, that's not something, something that's not really working well for the bulls here. Look, I'll do it simple, in a simple way, because we're still further away from the RBA and RBNZ interest rate decisions. Well, for this pair specifically, RBA interest rate decision, that's going to happen on the 1st of April, if I'm not mistaken, basically in the first days of April. Yeah, then this could still be a little bit, shaky. But that's why I'm taking a very conservative approach, I would say. If I get a clearance of the 0.6408 zone, then I will consider a move higher. I'll consider a test of this 200-day EMA. For the downside, I need to drop below the 0.6186 area-ish. This way, the pair could confirm a short-term forthcoming lower low. AUDJPY still below this downside line, still not looking good. By the way, this is our risk-on, risk-off monitor. So hey, so far I can see that this one is showing us that not everything is that good in the economy. Jumping into NZD USD, again, similar story. We like with AUD USD. By the way, AUD NZD, yep, we can see that the Australian dollar is looking weaker than the NZD. Well, you can see on this chart as well, clearly, against the US dollar, because again, AUD USD is performing worse. So look, again, for me, the upside scenario, a push. Let me just actually clear up the chart here. I want to put these colors again here. Yes. I don't want to. I want to make the emphasis. The reason why I'm like not having them brighter. I mean, we can thicken it up a little bit, but yeah, actually we can do that. The reason I'm not having these brighter because I want to keep the emphasis still on the chart, because sometimes the lines overshadow what's happening on the chart. So long story short, I am looking at some higher levels only if we clear the 100-day EMA here, shown as the blue line, and we clear this 0.5771 zone right there. For the downside, pretty straightforward. A drop below the 0.5584, and then we'll go from there. USDJPY. There we go. This week on Monday, I talked about this one, and there we go. Boom, we have the breakout, we have the drop. What's next? Well, next now is, well, who knows, to be honest. But no, to be, all jokes aside, I'm looking at this little area. And let me just actually, you know what, again, remove way too many lines here. This one, there we go. So I will bring back some of the lines. I think that this, yeah, this is something to keep in mind. So this area, we cleared it. Fair enough. Thank you very much. That's great. We're moving on to something else. So basically, I'm going to just mark this very quickly. So yeah, we cleared this area. Thank you very much. Now we're moving lower, and so far so good. I talked about this idea. I said that if we're going to clear the 149 zone, keep your eyes on it. Keep your eyes on the lower levels, and we cleared the 149 zone. We're still below this downside line taken from the high of the, or should I say, the highest point of this year, the current highest point of this year. And yes, we're still drifting lower. We're below that. So if you're looking for some higher levels on this one, then certainly a break of this downside line would be needed. But because we're now examining the lower side of it, this is where, like I said, this is where all these other levels kick in, and this is where we can aim for this 147.20 zone, which we kind of reached already. So in a way, I would say mission accomplished. So if you're looking for some further declines, then you need to wait for a drop below this territory. If we can get that move, if we can get that drop, then certainly I'm leaning towards some lower areas. I mean, this is where it becomes a little bit more difficult to find a good area, a good potential target. Maybe this could be, but that's way too far, and I think that we need something a little bit closer. So something like around here, I think maybe this. Well, okay, it got violated. No, this is okay, easier. What am I doing? Whenever you have a problem like this and you're not really loving any of the levels, which you see that I'm not loving any of the levels here. I sometimes apply my beloved Fibonacci extension. And at this point, let me just say, what can we do? So it's going to be a little bit subjective, but trying my best to find some sort of logic. So we drop it from here to here, no, yes, to here, and then we see that, okay, 0.78, this worked out. Okay, this was perfect. I think that this was a good at that point. Could have applied it earlier, but hey, you don't see everything straight away. But now, maybe this is the point which we can use actually. This is from a shorter term perspective. Yep, I think this could make a little bit more sense. So look, 149, that was our breakout area. It's somewhere around the 38.2 on the Fibonacci extension. We tested the 50%, perfect. We tested the 61.8%, perfect. We're currently resting on that. Look at this. I mean, so far it's working out. So the next potential target could be the 78.6 here, which is around the 146.40 zone. So it's not far, but hey, it's doable. And I think that could be our next target for now. So let's see if this works out, especially if we start falling below that 147 what was the number here, 20 zone, and then yeah, we'll go from there. I think that's a good way of looking at this, especially when you don't have much to pick up on. Very quickly, USDCAD again. This is a pair that we are going to be watching very carefully today because we also have the Canadian numbers coming out. So let me just show you what I'm talking about here. So Canadian job numbers. Look, I briefly talked about this in my video here on the US unemployment on the watch, about the NFP basically. So I picked up on the USDCAD, and look, we are resting near key area of support. This 50-day EMA together with the 1.40 or in general 1.43 territory. I like this area a lot, and this is what I'm getting right now. I'm getting this nice little hold up. Yes, yesterday we cleared it, but that's fine, that's all okay. But what I said to you recently, that if we do drop and stay below the 50-day EMA, my next target is the 100-day EMA, period. I'm not even going to say anything else, to be honest. USDCHF this week, yes, so far so good. I mean, this is just a kind of almost a replica of the DXY. It's kind of, sometimes you can almost even use it for hedging. Hey, we'll see. But again, that doesn't work out always because again we have the Swiss franc in there. So anyway, you need to keep on monitoring the Swiss data as well. So if you're not into that, then that's fine. But yeah. Okay, look, I ran out of air a little bit. Just bear with me one moment. Let me just have a sip of tea. Right. Okay. What can I say? For now, looking at the Euro USD. So yes, this is the situation with the ECB. Now, yesterday we saw weakness in the Euro. Look at this. Weakness kicked in. At some point we were rallying, but then look, it just kind of drifted back down. But that was a reaction to the ECB. And it was quite a logical reaction because we did correct back down. But the thing is that we then, we're now still rallying. So this is mainly driven by the US dollar right now. So at this point, look, I mean, I'm not excluding really the upside scenario here, and I think that this could be the case. Let me just put this one on here. This could be the 1.0936 is the next one that I'm watching here. This is the area. This is the highest point of November of 2024. I think that's a good target. And yep, if we start falling back below the 1.0760, then yes, great. I will consider a retracement towards the 200-day EMA, a little small retracement back here. But again, for the downside, I need to see a drop back below the 1.0660 area, somewhere like that. But at the moment, I'm leaning a little bit more towards the upside. Just quickly to mention EUROJPY, we were very close. We were very close to breaking this territory. I talked about this. Let me actually just get rid of the lines here, and I want to bring back all the lines that I have here. So, yep. So, something like this, basically. I talked about this a while ago, if you remember. I've also threw out a piece on TradingView about this. This is the area that I'm watching. Also, this downside line, which is here, again, depends. This downside line is very tentative. It could be this way. It could be drawn this way, or it could be drawn from here. So both of these lines are a little bit on the tentative side. Maybe the flatter one here, the shorter and the flatter one here is a little bit more interesting because it has more kind of accurate touches. So again, you be the guest. I mean, you be the judge. Not the guest. You be the judge because you know yourselves better. What's better for you? So do you want to consider higher levels from here or from this line? So the way I would play this game is, let's say if we break the steeper downside line, because at the same time we climb above all my EMAs on the daily chart. That's a positive. However, then we have to deal with this. So that's why you're approaching this carefully. Then you're saying, okay, can we break this? If we can break this, perfect. I mean, further upside here could be possible. But again, let's not forget still about the downside scenario. Maybe this move higher right now is just a temporary correction before another possible leg of selling. Let's jump into GBPUSD. This one's on fire as well. Look at this. Boom, 61.8. I've reached my target. Now the next target is the 70.5% on the Fibonacci retracement here. Hey, look, let's see what's going to happen here. I mean, at the moment, I'm loving this activity, but again, we need to clear that 61.8, which is roughly, let me just see, where's that? This is like the price is currently right bang on there. Yeah, okay, it's not going to shift. It's not going to shift. So look, this right now here is somewhere like around this 1.2930 zone, or yeah, something like the 25 zone, I would say actually. So this is a good target, and I think that yeah, we're testing it right now. So the question is, can we go further? Can we go further north? Let's keep an eye on this one. And I would say I'm gonna stick to the upside if we clear now this 1.2925. In general, I love the fact that, you know, I love the idea of aiming for the psychological 130 zone. I think this is quite a good target. So, right, ladies and gentlemen, let's jump into the commodity world before I run out of time. Gold looking good. Look at this fella. I told you on Monday and on Wednesday, I'm keeping an eye on that 2,820 zone. Look at this. We're struggling this whole week to clear it. Oh my God, look, this is amazing. This is just wonderful. So if we do clear that 2,820, and at the moment it seems like we want to do that, I'm leaning towards the upside. Yep, I'm leaning towards the upside because my next target is the all-time high. I want to see if we're going to reach that somehow. If we can, amazing. My next target is the 2,956, and then we'll go from there. For the downside, I would like to see a drop below the 2,884, 85-ish zone, just to be a little bit more on the safe side. So let me just put an arrow right there. I think that makes sense. Let me just thicken this up here a little bit, and then yes, we could go from there, ladies and gentlemen. Yes, we can go from there. So this is what I'm looking at right now. I want to see if we can clear this territory. Let's see if we can. Then yes, I am leaning towards the current all-time high. Let me just put the arrow like this, if I can fit it in there. Right, silver. Silver is approaching my downside line here. It's a very tentative downside line, but nevertheless, I'm keeping an eye on it. That one's taken from the highest point of October of 2024. If we can clear that, it's pretty straightforward. I'm going to go for some higher levels. Oil. Now, I want to emphasize on oil a little bit longer. Now, I have been talking about this one for quite a while now. $67 was my target, and there we go. We managed to hit that. We managed to reach that, so amazing. I'm very, very happy. But then we started climbing back up. And look, initially this worked out, so now I'm looking at this. So if we, by any chance, somehow stay below the $67 mark-ish, again, approximately around there, my next target, again, is the 66 point... Oh, you know what? Honestly, like I need to remove this again. This is a little bit in the way. Let me just bring back all the lines. So this is what I'm talking about. The 65.25. Look at this perfect hit. Amazing. Amazing. And yep, the 67 zone is also, like I said, this is something that I'm watching very carefully. And this is where so far it seems to be like working out nicely. Yes, we're climbing back above it, but that's fine. It's okay. It's called, it's called retracement. But the question is, can we stay above this area? Because on the weekly chart, look at this. If we can stay somehow above this area, maybe we'll see a little bit of a retracement back up. So this is what I'm saying. So don't rush into things yet. Keep your eyes on today. In general, what I would do, I would just leave it, because in general, for me, my mission has been accomplished. My targets got reached. I talked about this for a while now, and I said to you, I was aiming for the 67 zone. If that gets cleared, my next target is the lowest point here of this of September of 2024. Did we reach that? Wonderful. Now in terms of the downside, so this is the downside line I'm keeping an eye on, and like I said, any move up to it will be classed as a temporary correction before another possible leg of selling. But if we start breaking it, I'm leaning towards the upside. Natural gas, let's have a look at this one. Ooh, very interesting. Near 4.46 zone. We are near this resistance area. Let me just put this back on the chart here. 4.46, yes, this is something that I'm watching very carefully. I'm watching some of these levels. But I think for the downside, what I would like to see here and what I would prefer is to wait for a break of this little short-term tentative upside support line taken from the low of the 31st of January. If we can get that nice clearance, amazing. More sellers here could join in. But again, given the fact that we are currently more bullish than bearish, we are examining the upside, but a confirmation break above this 4.46 territory is required. Coffee is beautiful, very, very technical. Look at this animal, honestly. I think I'm going to get some after this webinar. I'm going to get some coffee. But look, we managed to hit this 409 zone. Amazing. That's wonderful. Now what's next? Now again, the same story. I'm looking. Let me just get rid of this again. I want to draw this from the beginning. So we're now seeing, a retracement back down. The question is, are we going to get something like this or not? We had a good hold up near that key area of resistance, which is around here, near this 411. Again, it's really up, like roughly, basically 411, 409. So it depends, So it depends how you're measuring. So that's why I always look at areas. So 400. 411, let's say, So if you're looking for some higher levels at this point, I think that's very straightforward. It's a straightforward thing here. We need to see a break of this 411 territory. If we can get a nice clearance, the 440 zone is my next target. For the downside, I would like to see here a drop, actually, not only below this upside line, but also a drop below this little hurdle, this 366 territory. If we can get that move, amazing. More sellers here could join in. And sugar. Sugar is my beloved sugar, and looking good here on sugar. What can I say? I mean, from the technical perspective, we are near this key area of support, which is around the 17.5 zone. If we can get a nice clearance of that, then I'll become a little bit more interested with the downside. At the moment, I'm just observing the price action because my upside scenario is only on a break of this downside line, which is drawn from the highest point of September of 2024. And finally, for dessert, crypto world, Bitcoin looking good-ish. Let me just again get rid of all this. Let me just get rid of all this, and we would redo the colors here. And actually, you know what? Sometimes it does help to start over and start fresh. And yes, I mean, this is something that I am looking at here. So, long story short, so basically we are currently trading below the 100-day EMA and below this breakout point here, which is roughly around that 90,000 mark. If we are looking at some higher levels, then basically for me at this point, not only that I would like to see a move back above the 90,000 zone, but also a break of this downside line, just to be a little bit more on the careful side. If we can get that move, amazing. I will consider maybe some higher levels, because at the same time we would be not only above my downside line, but also above all my EMAs on the daily chart. And then we'll go from there. So basically the arrow should be something like this. Will I aim for the current all-time high? Yes, I will, but I'll be very careful once again, because look, this in general, let's not forget that this, where's that box? We're still in the box. We're still in the box, and Bitcoin traders have to think outside of the box. Right. Apologies for the cheesiness. But yes, I mean, this is what, like I said, this is what they need to do. And like at the moment, like I said, this is the standard play for me, or a play scenario or something, or whatever scenario, just yeah, on Bitcoin. So at the moment, there's still a chance for this one to drift lower because we're struggling to go back up. However, if somehow we get a boost here and we break the downside line, push above the $90,000 mark, then yes, great. Potentially more buyers could join in. Ethereum is stuck near this key area of support. And let me just put this one, thicken it up a little bit. Yep. And yep. So currently we're seeing this. So we're struggling to drop below that 2,120 zone. If we can get a nice drop and stay below it, wonderful. I will go to the downside. At the moment, yes, the 2,000 mark is on the table still, but again, a clearance is required. Ripple is pushing back up. It's still in the box, but more importantly, Ripple is still in a squeeze, I would say. I think it's getting squeezed. I think it's getting, it's getting like we're waiting for Ripple to make a move. At this point, I'm just observing the price action because this could blow out in any direction. I mean, in general, a lot of cryptos can blow out in any direction, but whenever we get a technical scenario like this, I'm just kind of taking a bit of a step back. Oh, by the way, before, I actually should have mentioned Bitcoin, and then I should have mentioned Bitcoin Cash. Look at this. It's one of my favorite cryptos. I'll get to another one of my favorite ones as well in a bit, but I think this is just spectacular. Look at this, Bitcoin Cash bouncing strongly. We got on Wednesday, we got a breakout below the 300 zone, but we failed to stay below it. Then we stayed above this downside line. We pushed now back up. In general, everything's working nicely here. And you know what I really want to do? That's why I removed everything, not only to change the colors here, but also to kind of approach it from a different angle maybe. So this downside line here is something like this. So we broke the downside line. By the way, there's a little candle here. You don't see it, but it's actually there. So this downside line is taken from the highest point of December of 2024. So we broke it nicely. So in a way, this becomes like very positive in a way. Also considering the fact that we currently continue to trade above all my EMAs on the daily chart. So if we continue to do so, my next target is somewhere around here, somewhere around this 484 zone. Then yes, we'll go from there. So look, for now, this 484 becomes my next target. Let's see what's going to happen here. If we can, yeah, like I said, I would love to continue targeting the upside here, as long as we stay above all the EMAs on my daily chart. Right, so also just a quick mentioning on Dogecoin. Is hovering around that psychological 0.20 zone, but again, still looking a little bit more bearish to me. And Polkadot, this one's in a nice little range here, so we're in a nice little box, as I like to say here. Then yes, we need to think outside of the box first before considering any directional, any short-term directional move. Yes, at the moment, that's, like I said, that's the situation, that's the game plan here on Polkadot. So, ladies and gentlemen, I will have to wrap it up here. Thank you very much. Thank you very much for watching and listening. I really, really appreciate your time. As always, ladies and gentlemen, thank you for tuning in into my show, and whoever's watching live right now, thank you all. I really appreciate that. Jindal, thank you very much for your comments. Really, really appreciate that as well. So for those who are watching this as a recorded session, also thank you, because again, you're helping us out a lot. Please do like and subscribe, on our channel. That would really help us out as well. So hopefully you enjoy the material. If you have any questions or comments, honestly, please leave the message in the comment section below under the video, and then we can pick up from there. So ladies and gentlemen, have a beautiful day today. Today's like I said, today's Friday. If you have done already great this week, maybe just better to stick around, like just not doing anything and just watching the markets and what they're gonna do. I know the NFPs are coming out, but hey, sometimes, you know, like they might actually not work in your favor. So keep that in mind. Yeah, as always, like stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And don't forget about tomorrow. Tomorrow was Women's Day, so yeah, it's a big celebration. So yes, yeah, we'll celebrate that as well. So ladies and gentlemen, thank you very much. I'll see you on Monday. As always, yes, Mondays, 8 o'clock GMT time, 10 o'clock GMT plus 2 times. So join me for a new week of trading with me, Darius Anucauskas. Bye-bye.